The Financial Survival Network, helping you survive and thrive in the new economy. Go to KerryLutz.com and sign up for 30 free micro trainings on financial survival.
$14.90 WGCH. This is Kerry Lutz. You're listening to the Financial Survival Network. As everyone knows, we're in a depression. However, what most people don't know and they don't appreciate is that economic disruptions like we're encountering now are your greatest opportunity to build wealth, for you to build your financial fortress to protect your family. And my next guest, Ty Andros, is an expert in doing exactly that. Ty, welcome back to the Financial Survival Network. As we discussed, we're going to be doing this regularly.
Well, thank you for having me, Kerry, and we'll probably stumble out of the gate a little bit, but I'm quite certain that we can provide deep, thought-provoking commentary, and I figure it'll be 2 or 3 weeks and we will be a well-oiled machine. But I look forward to building a relationship with you and your listeners.
Hey, well, when you're looking for advice, when you're not sure what to do, and when you're in uncertain times, you have to find people who've got the knowledge that you don't, people that you trust who don't have a stake in your ultimate failure, but rather have a stake in your success. And that's why you're on here now, Ty, because you fall into that category. You've been into Austrian Economics for most of your life. Not only that, it's not enough to be a theorist, but you've actually gone a step further and taken Austrian Economics, the tools, and used that to help people build wealth on TraderView.com and on your newsletter, Tedbits. So that's why we're doing this, because you're uniquely situated to help you grow wealth. Talking about growing wealth, we're looking at the stock and bond markets, and we're seeing QE to infinity written all over them, aren't we?
We certainly are. Anybody that's familiar with any of the stock activity recently, you can see the printing presses all over it. It's a low volatility march. It looks like a squirrel climbing up a tree. There's really no downside, no upside. Well, there's good upside, but it just crawls along. And sell signals start failing. And they fail over and over and over again because of, I'll call it a steady flow of printed money. Well, let's talk about QE and, what happens to markets when there's being a lot of money flowing into the markets, because, the banks get it first and they really don't want it to sit on their balance sheets because it starts melting like an ice cube. And it's kind of a free trade because they really are getting the money for nothing. And so you can tell when you look at the activity in the S&P now or the NASDAQ or anything from the middle of December. And you can see that QE3 starting, and of course it started really 2 weeks after that $600 billion swap. At the beginning of December, when Bernanke went in there to, I'll call it, rescue the European banks who they had walked the plank. What does that mean? That means that the overnight wholesale funding markets had shut them off and they couldn't fund their operations with overnights. Mm-hmm. And 2 weeks later, lo and behold, here's the money coming into the markets. And, obviously followed by the LTRO at the end of December. But go look at all the different charts, and volatility literally comes out of all the stock markets, and they all of a sudden sell signals start failing, and markets can become more overbought than you can imagine. And, of course, we're at those places right now. And of course, sentiment now after these big runs is red hot bullish, and it's all set up for a great big pullback. But you don't bet on it because the printing presses are in full gear, and of course stocks are levitating on two things: one, from cash flow into them from bank trading desks. Two, we've got high-frequency traders, which are virtually 80% of the market. This is done on virtually no volume. And three, they're debasing the currency so fast that the stocks are repricing to reflect the lower purchasing power of what they're denominated in. And so, we'll call it Goldilocks or whatever, but for the I'll call it the sheeple, or the people that are, out there investing, with faith that these are real markets, they're the dupes. And so how long can they keep it going? How long can they keep pressing a printing press button? They're going to press printing press buttons until people quit accepting the money, and we're pretty far away from that.
How far do you think we're away where there's a mass loss of confidence in the U.S. dollar, and that will mean every currency in the world because it all comes back to the U.S. dollar, right?
Well, everything is a derivative of the dollar because, 63 or 4% of central bank reserves are in dollars. And there, you'll never see a treasury bond failure. It's interesting that we had a bond market auction last week fail, but I want to stay on subject about the dollar. Mm-hmm. Everything, currencies don't float. They just sink at different rates. And it's an illusion that you can store wealth in them or purchasing power. But I actually believe we're pretty early still in the ball game. I think that fiat currencies have most people don't know what money is.
Yeah,
probably a lot of your listeners. And future discussion, I will take people into how to recognize money.
Yeah, if they've been listening to the show for a while, they might not know what money is, but they definitely know what money isn't. And that's as important as anything else for.
But the dollar is going to be the last to fall, Kerry.
Oh, it has to.
Okay, because it's the foundation, and when you look at central bank reserves since 2000 up 400% or 500%, it's them monetizing each other's debt.
Yeah.
Printing money to hold up their treasury auctions.
Of course.
Taking down the debt securities and calling them assets. Mm-hmm. But it's actually a check-kiting scheme.
Sure.
Where they write worthless checks to each other and never have to cash them.
You know what that reminds me of? We're going back probably before a lot of our listeners were born, because we have a younger group. If you're like in your 20s and you see how the educational system, the government's failed you, you're out there looking for answers, and that's why you come to the Financial Survival Network. But what's really interesting is the whole thing reminds me of the stock market collapse in Kuwait. I think it was in the late 80s or early 90s, and it was a massive check-kiting scam because everybody was writing post-dated checks to everyone else. None of them had the money, and they were buying shares with it. And then somebody tried to cash one of those checks, and it was like a house of cards. It all collapsed. And that's what this whole international, central bank back and forth reminds me of. It's just, like you said, a big check-kiting scam.
Well, remember, the dollar is the only currency in the world where both the shorts and the longs don't want to see it go anywhere.
Yeah.
The shorts are the people printing it endlessly, and the longs are the people that are trying to store wealth in it, which is basically all of the world in this case.
Yeah. So, and that brings us to the, we wanted to talk about this job creation myth that's going on, that somehow we added, a couple 100,000 jobs in the U.S. last month, which is pure fiction, isn't it?
Well, they had the greatest number of the second greatest number of people fall off the I'll call it job seeking category in history. It was 1.2 million people. Mm-hmm. And of course, these shenanigans, seasonal adjustments, have been going on for months and months now, and this is obviously the Ministry of Truth, also known as the Obama administration, working on turning black to white. And, truth is treason in the land of lies, and of course that's where we live. To think that employment is gathering steam is a statistical farce, courtesy of the Labor Department. And anybody that goes and looks at John Williams or anything else knows that the true rate of unemployment, measured as it was in 1980, is well over 20%. Mm-hmm. And job creation is virtually nil. I mean, it's coming. Humans aren't straight line animals. Mm-hmm. And, in Austrian economics, you can only be pessimistic for so long.
Right.
And then you have a counter-trend rally. Mm-hmm. I mean, that's exactly we're in a secular bear market, a secular, I'll call it extinction event, but how long it can last and the counter-trend rallies are difficult to predict. That's what you have to do, why you have to do your economic homework as it unfolds to properly, sell highs or buy lows or whichever it is your markets you're trading. Mm-hmm. We're in the end game. The destruction of wealth creation and producing more than you consume, that's gone the way of the dodo bird, and of course they've substituted a printing press for the lack of economic growth.
Yeah, that's called consumerism, where you consume more than you produce, and somehow you're proud of it, and you just watch the people at Walmart on Black Friday. They're fighting over flat screens. They're fighting over $20 waffle makers that they can buy for $2. And as one blogger said, if they're fighting over this to save $20, what is it going to be like when they don't know where their next meal is coming from?
Well, I just can't emphasize enough how Greece is a microcosm of what's to come. These are people that have been taught all their lives that they can have something for nothing, and that they, one of the reasons Greece is broke is because everybody there is a socialist, and they believe in wealth redistribution. But the problem is that people they were taking it from have left the country.
Right, and
so they're now left with a bunch of people that want to take it from somebody else, but there's no one to take it from. Mm-hmm. And they borrowed all the money they can, and the market says no. Now you got to pay the money back. And even if they default, they're still going to have to learn how to produce more than they consume, which is, I think a fantasy at this point. Those people are destined for years of grinding poverty, whether they have to pay off the banksters or if they default on the banksters, they still have to regain the confidence of the market. I mean, like if Ireland defaulted, mm-hmm. I actually believe they would recover very quickly, just like Iceland, because of their, I'll call it, Ireland is a Celtic tiger. I mean, they're a manufacturing hub. They're the epitome of Austrian wealth creation. The only reason they're indebted is because they guaranteed the banking system and literally had to go into debt, equal to the amount of GDP to call it guarantee banksters who lent them the money and printed it out of thin air.
Right. Yeah, there's no question about that. And as Margaret Thatcher said, the problem with socialism is that eventually you run out of other people's money. And I guess the same thing's kind of going on in Portugal as well, and Spain to a lesser extent, and other countries. So that leads us to the way to profit from the chaos, profit from the economic collapse. And what's the best way to do that, Ty?
Well, for wealth creation personally, it's gold and silver, but you need to learn to make money as these overpriced assets afloat on leverage fall to their doom.
Right.
Okay, and they're preventing the housing market from clearing, but that's probably going to be one of the very rock bottom opportunities sooner than later. Mm-hmm. And I mean 2 or 3 years. We don't know where the bottom is. I actually believe real estate's going to fall another 30% at least, and we've got the commercial real estate really has been held up on wisps of air, but they're not going to be able to roll all those commercial mortgage-backed securities over the next 2 or 3 years. We're going to have an equal debacle here and in the continent in commercial real estate. You have to make money when markets go down, Kerry. If you can't figure it out, and of course I was talking a little bit earlier that you can't be short here, but you can be at some point, and you better be able to recognize it, and you better be able to set your sails to make money when I'll call it financial assets fall. And they've all got to fall to a point where they produce a real return after real inflation. Well, in the case of we'll say use shadow stats again, it's at 10.5%. So, bonds have to fall to, a yield of 12 or 13% before you're not what I'll call financially repressed, which is where you buy a financial asset, and you're actually losing your purchasing power at a compound annual basis of 6 to 9%.
Oh, sure, yeah, absolutely.
I mean, so that they're cutting your wealth in half every 6 or 7 years using the rule of 72. And you need to learn how to fix your paper and restore the functions of money. And most people don't know how to do that, but it's very simple to do. Although you need to call me to learn how to do that.
Well, we're going to have a link in the resource section of kerrylutz.com where people can just click and get right to traderview.com. You can ask Ty any questions you want. And you'll also be able to look at all of our older shows. We've got over 200 shows up on the site. There's a real wealth of information. There's our financial survival toolkit, and Ty's somebody who's been sounding the alarm on this situation for a long time. If you had listened to him earlier, you wouldn't need to listen to him now, is really what it comes down to. Right, Ty?
Well, I've been pretty accurate over the years, although you all, like I said, the zigs and zags is, like I said in our last comment, this is King Kong versus Godzilla. King Kong being Darwin and Mother Nature versus Godzilla being the Bernanke and Mervyn King and Mario Draghi and,
all those
Mercosi and, the most powerful people in the world.
And they're sociopaths, right? I mean, they're all sociopathic pretty much, right?
Well, sociopaths and psychopaths.
Yeah. I don't know exactly what the difference is there, but they're either one of them. You don't want to know them. I was once married to one. You just stay away from them. You see them coming towards you, you cross the street and get away from them. That's the best way to deal with them.
Well, actually it's a great opportunity, but boy, you got to keep your head down. You really have to be focused on what you have to do, and stick to your knitting and keep working your plan over and over again. And that's absolute return investing, real money, fixing the money you have, learning how to work the indirect exchange as von Mises laid out, exchanging your worthless paper for real things that have real cash flow, and not overpaying for over-leveraged assets.
Sure.
It's, there's a lot of things you have to do.
It's complicated, but it can be done. So, Ty, hey, thanks for being on. Where do we find you again?
Well, I'm at traderview.com, but tedbits.com is about to open its doors, and it'll be a subscriber-only website, but its subscriptions will be free. And, Kerry, I sent you my last newsletter, which was the first part of the 2012 Outlook, called When Leverage Fails. And I hope that your readers go to your website and pick up a copy of that and sign up, because subscriptions to TEDBits are free, and next week there'll be part 2.
Yeah, well, what we'll do is anybody who's a subscriber to kerrylutz.com, or if they sign up now, with your permission, we'll just send them that first part of the 2012 Outlook. I've been reading it. It's really powerful, and it makes a lot of sense, and I think there's a lot of good things in there that can help you build wealth, preserve wealth, and not be a victim, which is really what avoiding a depression is all about.
Well, it's the world as I see it through the Austrian lens.
Ty, till next week, you have a prosperous week ahead. We'll be talking to you next Friday.
Thank you for having me.